Hi, this is KareyBrown with eXp Realty, and this is Real Estate 101. I'm here with Penrod with Fairway Mortgage. Again,
Hello.
we are going to do a segment about rural development now. So, obviously, rural development means that you have to live in a rural area, but we're going to discuss specifics around what is defined as being rural. So, take it away, Ken.
Okay, so we call this USDA. It's a rural loan that, again, has to be done in an area that is not in the city. Really, if you're in Shawnee County, there is not anything in Shawnee County that qualifies except for Auburn. Auburn, Kansas does qualify. You would need to buy a home in, say, Osage County, Jackson County, Jefferson County, Wabunsee County. I don't know much. Douglas County might have some on the outer edges, but not within the city of Lawrence. And the best way for us to know if that home qualifies for a USDA loan is to just call me and I'll look it up on the USDA website. There's a website I go to and it tells me, I put in the address, put in the zip code, and it tells me, yes, this home is eligible, or no, it's not eligible. And basically, if let's say the home is eligible and you can do a USDA loan on it, you don't have to put anything down. USDA is zero down. So on a $100,000 home, you're going to have a $100,000 mortgage. It's really a great deal as far as that goes. Fees are the same as a normal conventional loan, so they're not any higher. Interest rates are awesome on USDA. Out of all of our products, probably USDA is about the best. Because of low down payment, the PMI is the least. The factor on a USDA loan is 0.35% per month. Compare that to FHA, it's 0.85% per month. So that's a whole 0.5% less just on the private mortgage insurance that you pay every month. Now on USDA, you would pay that for the life of the loan. So it's not like conventional where after you have 20% in equity, it goes away. You would have it for the term of the loan, but it's so little that it really is not a huge factor in my mind, at least. If you wanted to refinance it later, you could, and then get into a conventional loan and totally get rid of that PMI. But the rates are low. Conventional today would be about 3 3/8, 3 1/4, and USDA is right there with it, the same rate. USDA also has income limits. So again, the best way for me to know is for you to call me and give me an application. USDA uses household income. So let's say we have 2 borrowers and they have an 18-year-old daughter. And their daughter works at, let's say, Dylan's grocery store, and she makes $13 an hour. Even if she's not on the loan, I have to count her income because they use household income. They don't just use the borrower's income. Let's say.
Real quick, does the child's name show up on the deed or anything?
She does not show up on anything. All I do is get a copy of her pay stub to give to the underwriter to prove what her income is. Karey, you probably wouldn't even know that I had done that because she doesn't show up on the deed. She doesn't show up on the mortgage. She's nowhere on anything. I just have to get documentation for the mortgage, for the loan file, to prove that the household income did not exceed the limit. Same with, let's say you had a couple and their mother lived with them and she received Social Security income. We have to use that too. That's household income. So I would get a copy of the mother's awards letter, the Social Security award letter, to show how much she receives each year. And we have to show that they don't exceed the limit. Now, on USDA, they use number of people that live in the house. So let's use the mother and father, and then the 18-year-old daughter that works at Dillon's. We would use 3 people, and I would put in all the income, and basically the system would tell me whether or not they qualify. But I can tell you for 2 people, the income limit is $91,900. So for 3 people, it's going to be higher than that. So we just have to, again, make sure that that whole household does not exceed $91,900. Well, if it's just 2 people. If they do, and the property qualifies, then we're good. We move forward. Everything else is exactly the same as doing FHA and conventional. When I do the appraisal, I know we talked about earlier how FHA is a little more strict on the condition of the home than conventional is. USDA uses an FHA appraisal. It's a conventional loan, but uses an FHA appraisal, and that's because it's government. So again, on USDA, that home has to qualify just the same as if it were an FHA loan. No peeling paint, GFCI outlets.
Handrails.
Right. Exactly. All that, health and safety. So, but that's one thing I think a lot of real estate agents don't know is that we do use an FHA appraisal. And usually it's because USDA, the homes are, I think for the most part, everything's come back fine. Meaning we didn't have a whole lot of requirements when we do them. I think it's also a loan that's probably underused. I don't know that a lot of people realize it's out there. But when the home does qualify, it's a great deal. We talked about, credit score. The minimum credit score on USDA is 620. So a little bit higher. FHA 600, USDA is 620. So we could, the property eligibility, the FICO score, income limits. What did I miss?
The only thing that I can think of is the importance of a lender that knows what they're doing. Obviously with Kim, I know it's going to get done right. In the past, I've had issues with, I had the listing, or my team and I had the listing, and the agent had picked a lender that really they weren't really good at documenting and every I dotted and every T.
Right.
With USDA loans, that package has got to be right when you send it in. Otherwise, you go to the bottom of the pile, and they may not even call you to tell you it was wrong. Meaning that you're not going to close on time because they have such a huge stack of people every day that they have to.
You bring up another point, Karey. That's one thing I didn't tell you. So USDA, they underwrite their own loans. So we underwrite it first, and then we send the entire package. It's electronic, but it goes to USDA, and then they underwrite it. So you're exactly right. If we are not pushing this, say we have a 30-day close. There was one time when we wouldn't do a USDA for less than 60 days because they took that long. So if we have a 30-day close, the first thing I do is I say, let me check with USDA and see what their turnaround time is. Because I already know I need to add whatever their turnaround time is, I need to add it on to my time. So if they're 7 days out, that means I need to get everything, the perfect file, appraisal, everything to them at least 10 days before that, because there's other things that have to happen after they approve it. So you're exactly right. If you're not keeping on that, I mean, it's your clock's moving fast because of the extra time. Now, right now, I think USDA is 3 to 4 days out, which isn't too bad, but I'm still constantly pushing on people. You've got to get me your stuff or we're not going to meet that deadline.
Right. And you also have to factor in appraisal. So if there are any factors on the appraisal that have not been taken care of, they've got to be done in the time frame before Kim even sends that out. Otherwise, it just gets kicked back anyway.
You're exactly right. Yep.
Yeah. So if you've been around long enough, you've survived a rural development loan during a government shutdown.
Yes. Yeah, you don't do them. They didn't happen. Yep.
Yeah.
There was.
Yeah. So
that wasn't any fun because it's hard to tell people, no, we can't do anything. You never want to say no. You always want to say yes. And when the government shut down or when COVID happened, yeah, you are not doing USDA loans. You're right.
No, and if you're stuck in the middle of one when all that happens, which I've had happen twice, and sellers, obviously you're stressed. Why wouldn't you be stressed? I say
for one, they don't understand a lot of times, right? Well, what's going on? And two, they want to buy a house and move on too.
Or they've already bought a house.
Yes.
And now they've got 2 payments.
Yeah.
It's buying and selling. So selling a house, it's always one of 2 things. You're either happy because you're moving on to something else, or you're not happy because something happened.
Yeah.
So adding a rural development and a government shutdown to it.
Yeah.
One day to be a real estate agent and a
adding another factor in there that you don't want. Yeah. Nobody wants to make that call.
Yeah. I always joke I
don't like things out of our control.
Yeah.
Yes.
Clearly, it's definitely, if there's any talk of a government shutdown, you need to start talking to your buyer about a different approach, because
yes.
And the 0% down is so enticing. And why wouldn't you want to do it? But holy smokes, you're not going to do it anyway. So you may as well figure out a second route around that.
That's right. Because it is a huge selling factor. I mean, think about it. You can tell a buyer, you can buy this house for nothing down.
Yeah, absolutely. If the house qualifies, that is a major selling point.
Huge.
Yeah, because, you think about it, a lot of the rural homes that fall in the income limits, sometimes there's things that have to be fixed. And then you got a seller that says, yes, I'm willing to, or no, I'm not willing to. And in this market anymore, sellers really don't have to do anything. They just sell it. So
yeah,
we're talking pre-COVID.
Yeah. The old days, right?
Back in the old days.
It kind of feels that way right now. Yeah. I don't know if we'll ever see it again.
It's bound to. I mean, there's always a cycle, so it's bound to happen.
That's right.
But now you know about rural development loans. So
that's right.
How do they get a hold of you, Kim?
They can call me anytime on my cell phone. That number is 785-640-1700. I can take an application over the phone, or I can direct you to my website and you can fill out an application online, and you can also text me.
And our number is 785-213-5188.